Hello, everybody. Welcome to Farm Finance 102. I see a few familiar faces. However, there seems to be a couple new ones that I'm not as familiar with. So I welcome you all tonight. I'm just going to kind of dive right in and kind of introduce myself a little bit. My name is Jen Skoog, and I have Family Ritz Farm just south of Fargo near Christine, North Dakota. I am an accountant by trade. I'm not a CPA, but I am an accountant, and I've been doing accounting for quite a few years. And then a few years back, I actually started up my own farm, which is my dying passion. So Family Ritz Farm was established back in 2017. And like I mentioned before, I live near Christine, North Dakota, and we are right on the Red River, which is one of the most wonderful parts of our property. And on our farm, I have a very diverse farming practice. I have got a number of different things. I've got produce, honey, eggs. We have chicken layers and duck layers. We also do some meat processing and raising chicken, lamb, and pork. And then all of our awesomeness out of the garden, I also do a lot of different preserves to kind of carry us through the winter months. So as we go through tonight, I want everybody to make sure that feel free to ask questions at any point in time, because I know I'm going to be throwing a lot of information out there. Some of it might be brand new to you. Some of it might be a little daunting, a little overwhelming, and that's okay. You know, if it was easy, we'd all be accountants. I wouldn't have to teach anyone this. So feel free to just stop me anytime. You can go ahead and throw your questions in the chat box. Stephanie will be keeping an eye on that for me tonight. Or if I'm going through something and you need to stop me right then and there, feel free to unmute yourself and just stop me, because I'd rather have those questions answered than you walk away without an answer. So as I have mentioned, tonight we are going to be doing Farm Finance 102. This is going to be a little bit more of a in-depth take on the different aspects of farm finance. So like I mentioned, things can be a little overwhelming, a little confusing, but that's okay. We're all here. We're all learning. None of us are experts, not even myself. So tonight, the three main areas that we're going to be hitting is preparing for tax season and what to do to save yourself a little money in that area. We're also going to focus on enterprise budgeting for farm profit. And then we're also going to take a look at creating cash flow budgets that actually work for your farm. So first off, let's dive into taxes, because I know that is so much fun and everybody loves taxes, right? Wrong. I will fully admit, I am not a tax accountant, therefore my disclaimer. All of the information in the presentation is just strictly for informational purposes. It's not intended to substitute for obtaining actual accounting, tax, or financial advice from professionals. So if you have some major questions, you know, we can definitely bounce around some ideas, maybe specific to your farm or just general questions you have. However, I'm not an expert. I will never claim to be one. I highly advise that you do confirm anything with your tax professional. Find a good one you like too. All right, so let's dive right in. I know that tax season is like technically right upon us, and I know that some of the deadlines have been shifted a little bit last year and this year because we're living the wonderful world of COVID. So I'm going to kind of hit the deadlines in a general normal year. Last year, this year are a little different, so be sure that you check with your tax accountant to make sure that you know exactly what tax deadlines there are currently. So as far as farming goes, we actually fall under our own little separate category of farming and fishing tax filing deadlines. And there's a couple different things that we're going to touch on. The first one is to keep in mind that if your income that you make from farming or fishing, farming is less than 2/3 of your total gross income, the good news is you typically do not have a special filing deadline other than your standard April 15th. Or whatever it happens to be for the current year. And my little disclaimer, assuming no other special tax filing requirements are needed depending on your situation. So if out of all the income that you make or that your household makes, whoever it is that you're filing taxes with, I will give you an example. A few years ago, when I used to work at a large corporation in town before I quit my job, I was bringing home a considerable amount. My husband was also farming full-time, as he's a conventional farmer. And because my income and his income was a little bit closer to that 50-50 split, sometimes mine was a little bit more, sometimes his was, we did not qualify, or we did not fall under that farming deadline. And so all of our income taxes and everything were due by the standard tax deadline, typically April 15th. However, once I quit my fancy corporate job up in town, I actually started farming full-time. I still do some part-time accounting work. However, it is a fraction of the income that is actually made from the farming that my husband has, and then the farming income that I bring in. So we actually fall under the second piece here. So if your income is more than 2/3, the farming income is more than 2/3 of your total gross income, then typically you are required to file and pay, if necessary, by March 1st if you want to avoid making estimated tax payments. You can go ahead and file typically the April 15th deadline. Nobody's making you do it by March 1st. However, if you choose to file all of your farm taxes and personal taxes by that April 15th deadline, then typically you have an estimated tax payment that's due by January 15th to avoid any penalties. So for us personally, this year, I think we had our taxes, I think I had a meeting with the tax guy on February 14th, brought him everything. I think the following week he had everything done, swung in, signed it, and we were good to go by the end of February. So that's something that we always make sure that we do, at least in our household. The nice part is, especially when we have a refund, we get it a lot sooner than everybody else, which is kind of nice. So these are just two different types of deadlines depending on what kind of income you have. And then again, check with your tax professional to see if you have any other special tax filing requirements, and go with that. So great. I know you now know when you need to file your taxes by, but what should you be bringing when you're going to your tax accountant? Now, typically, most of us are adults. We've probably had some dealings with the tax preparation before. Some of you have already got farms up and running and you've already been through this process. We're still going to touch on a few different things that I recommend that you bring to your tax accountant. And the more you bring, the more organized it is, the less you have to spend on them doing your taxes for you. So the very first thing that I highly recommend is if you are using a new tax preparer, be sure to bring a copy of your previous year taxes. This just happened to us 4 years ago, I believe it was. My mom, of all people, was actually a tax accountant for H&R Block, and she had been taking care of our taxes ever since I was like 16 and had my very first job. So she's always taken care of it for us. She ended up getting out of the tax profession, and when we really started ramping up, especially when I started ramping up on farming, my husband started ramping up on farming, we had a lot of new stuff. She wasn't as familiar with the North Dakota farming tax laws. So she said, you know what, probably a good idea to find a different tax account. So we had to find a new one, which was interesting, but we were luckily able to find a very good one up in Fargo who knows what he's doing. So when we ended up having that, we needed to make sure that we brought our previous year taxes to ensure that they have all the previous information. He kind of knows what to look for, kind of to ask, and is able to start with that. Along those lines, be sure to ask your tax preparer if they have a workbook or a checklist that you can use to make sure that you are bringing everything that you need with, so that they don't have to keep asking you. You got to email it to them, drop it off to them. The more back and forth, the more expensive your bill is going to be. This one is bolded because we're going to talk about it a little bit later tonight. The other thing is bring a complete and detailed balance sheet and P&L statement, which is also your profit and loss statement. We'll be touching on balance sheets and P&Ls just very briefly tonight. that's kind of, I'm kind of hoping everybody kind of knows what those are. If not, we have some great resources too that you can learn a little bit more about those. But the more complete and more detailed that information is, again, the less time they have to spend digging through all of your paperwork, and the less expensive it's going to be for you. You also need to make sure you bring any federal reporting documents, any W-2s if you have any W-2 income, 1099s and 1098s. So 1099s, a lot of people are familiar with those. There's a number of different types of 1099s. 1098s are actually mortgage interest. So if you have a mortgage on any property that you may own, you're most likely going to get a 1098 if you paid interest on it over the tax year. And then any other federal reporting documents, you know, whether it's investment or interest statements, you know, different things like that. Make sure you bring those with you. So these items here are kind of the really big nitty-gritty ones. I have a list of just kind of some other random ones that don't necessarily apply to everybody, but something to keep in mind. If you do any commodities, my husband, he's a conventional farmer. He has commodities that he sells, corn, soybeans, that fun stuff. And so he actually will sometimes defer payments. And so we'll have those contracts where instead of getting the money at the end of the year, he says, no, I got enough income this year. Let's put it on to the following year. And so they'll defer payment. So your tax account needs to know about those. Any government program payments. Sometimes, depending on what type of farming you do, you may see some of those. I had a little bit of that the last couple of years because I do livestock. And so my pigs and my lambs actually fell under a small government program, and I was able to get a small payment off of those. Any crop insurance payments, anything like that. If you're an accrual basis farmer, you also need to bring your inventory listing. Now, if you guys are sitting here going, oh my gosh, I don't know, there's a very strong chance you're not an accrual basis. 99% of the time, most farmers operate on cash basis. However, there are some that do operate on accrual basis. If you want to know more about accrual basis accounting, I'm not the person to ask. It is a little more foreign to me, I'm not going to lie, but there are some great resources out there for it. Any medical, dental, property tax, education, health insurance, that's a little more on the personal side, but sometimes it ties into your farm. And then anything else that you may have that is farm related. So once you get all this awesome goodness together, when you're operating a farm, you're going to have a special schedule that is going to have to be completed. And some of you may already be familiar with this. Some of you, this may be the first time looking at it. I'm not going to lie. When I show it to you, don't freak out. It's a little overwhelming, but we're going to step through it. It's actually fairly easy to complete. Now, again, if you bring the information to your tax accountant, they're going to be able to put everything in the appropriate places. But tonight, we're also going to learn about how to make it even easier for them to make sure that your income and your expenses are appropriately allocated on the Schedule F. So I'm going to show everybody. Can you guys see this? So this is a copy of the 2020 profit loss from farming, also known as the Schedule F, which is related to the Form 1040. I don't know about the rest of you. Like I said, I'm not a tax accountant. Honestly, when I look at tax forms, I kind of like have a little sticker shock at first. I'm like, oh my gosh, that's a lot of boxes, a lot of numbers, a lot of words. But we're going to kind of just go through this real quick, and I'm going to just kind of show you because it's actually broken out really nicely. At the top, you know, you're going to have the name of proprietor, your social security number, your EIN number, principal crop or activity. A lot of times it's, you know, like my husband has like corn and soybeans on his because it's and alfalfa, which is typically what he does on his. Mine, honestly, I can't even remember what mine says on it. And of course, I've got my taxes right here so I can look. Mine, I think, just has maybe vegetables or, I'm going to look here. Produce and animals, actually, is what mine says. So mine is listed as produce and animals, which is fairly accurate for our farm since we have such a wide variety of items. So the top piece of information up here, your tax accountant is going to be able to help you answer those. But what we're really going to get into is the rest of it. So
Can I
this
ask a
part
quick
one here.
question?
Oh, go ahead.
I'm not sure if everybody knows what an EIN is. Could you just touch on
Oh,
that?
yeah. So an EIN is an employer identification number. So the reason why somebody would have one of these is very dependent on how your farm is organized as a business. So whether you're a sole proprietor, whether you're an LLC, a corporation, a partnership, you know, things like that's going to be organized a little differently. Even as a sole proprietor, you're still able to apply for an EIN, which is super, super easy, by the way. EIN is very commonly used, especially if you run like payroll. You're going to need it. Typically, you need an EIN on a lot of the paperwork. So I'll actually give you a good example. My husband has a farm. It's just him, and he actually has an EIN. The reason he needs one is because he has a lot of additional paperwork that is processed through the government, being a conventional farmer. So we opted to get an EIN because some of that paperwork requires one. I have Family Roots Farm, and I'm actually a sole proprietor also. However, I do not currently have an EIN. I will say, though, that that will be changing in the extremely near future, because I will find myself having to actually run payroll this upcoming year, since I'm going to be hiring a couple people. So an EIN is just another identification number that is commonly used instead of your social security number. So for me, I use my social security number on all of my tax paperwork, including my farm finances, because that's all I have right now. I'm a sole proprietor. However, once I become an LLC, or if I do a partnership, or once I start running payroll, I'm going to need that EIN number. So I hope that helps explain it a little bit. So we're going to jump into part one here. This piece right here, this has to deal with all of your farm income. This is all the money coming into your farm. So no matter what you do on your farm, there is a category somewhere in this section that all of your income will fall into, because they have this awesome other income down here, which is kind of handy. So they've got things broken out: sales of livestock or other resale items, costs or other basis of livestock. This is if, this one, I'm not gonna lie, I don't ever use this. All of my stuff typically falls under line number 2 here. This is if you're gonna buy livestock or other items with the intention of reselling it. So there are some businesses that strictly buy from one. They become, you know, their business is like a grocery store in a sense. You know, they have all these items, and then their intention is to then resell it. So that's where lines 1, A, B, and C would fall into play. I guess one example, let's say I didn't raise my own eggs. Instead, I had a number of other farmers that I purchased eggs from for $3 a dozen, and I turn around and I sold those eggs for $5 a dozen. So this is where I'm going to list my sales, my costs associated with those sales, and then the difference between the two. So that's mostly resale in that area. Line 2, sales of livestock, produce, grains, and other products. 99% of my items are listed on line 2, and you're probably going to find a lot of yours are also. We've got a line for cooperative distributions, which this is one my husband has. He actually gets a 1099 PATR. There's agricultural payments, commodity credit corporation loans, and then also those loans that are being forfeited. That's also included as income. If these things don't make sense, it's probably because you don't have it, or you most likely won't. But just in case you do, there is a spot on there. We've got crop insurance proceeds, if you've got crop insurance and you make a claim on it. Custom hire income. My husband sometimes goes out and will actually do field work for some of the other local farmers. He's got a roller, for example, that you do after soybeans, and he'll actually go roll other guys' fields, and he'll get paid for it. So this is that custom hire, which that falls under. And then any other income. That would be just anything else that you can possibly think of would fall under there. And then your gross income would be on line 9. So this part 1 is your income piece. Part 2 is your farm expenses. And so you'll notice there's a lot of different categories, and we're gonna, in just a few minutes, we're gonna actually look at part 1 and compare it to your income statement, and part 2 and compare it to the expense part of your income statement, and you can kind of see where they fall into play. Farm expenses, again, this is used for the cash and accrual method, this piece. If you go down to the second page, there's your income for accrual method. Again, if you are an accrual method farmer, I highly recommend that you just work with your tax professional, because that is kind of a whole different ballgame. So back up here, so this is where all your expenses are going to be listed. And we've got a number of different categories here, and we're going to talk a little bit about organizing your income statement so that it follows very closely to the Schedule F, because it makes it so much easier for you and for your accountant to be able to input those numbers, find where they go very quickly and efficiently. So, all right, so income statement. Your income statement, or also known as your P&L, is a report that shows all of your money coming in, your revenue, all your money going out, your expenses, and then it shows your net income or loss for a certain period of time. So that's really what's going to show you real time. The money coming into your farm, the money going out. Are you making money? Are you losing money? Income statements are a wonderful, wonderful tool to use, as long as you keep them updated. Because as I tell people, the information you put in is what you're going to get out. You put crap in, you're going to get crap out. So make sure it's updated regularly and you have good information being put in there. Also highly recommended to align your chart of accounts with the Schedule F. So I'm going to show you real quick here, just a visual of our income statement. So this is a really, really super basic income statement template. All of these templates are available out on the shared drive that Stephanie has granted everyone access to. So if you see something that you like, go ahead, use it, grab it. I've stole these from other people myself. So feel free to use them. And then there's also additional templates out there that I will not be demonstrating tonight. But like I tell people, go out there, find what works for you, because an income statement doesn't have to look identical for everybody. If you like it laid out a little differently, as long as it does the job, that's all that matters. So here we've got basic income statement. We've got a few different lines of income. We've also got our few different lines of expenses. So being able to group those together, your income on the top, expenses on the bottom, and then down here, according to this income statement, this farm had a net profit of $6,200. So that's good. They're making money. You know, if we were to all of a sudden change this to a different number, boom, a loss of $518. So as you can see, very, very easy to see your money coming in and your money going out. So how does a Schedule F and your income statement work together? On the very top here, you see part 1. Look familiar? That's your Schedule F. That's part 1 off your Schedule F. This is your farm income. Down on the bottom, this is the income from the income statement that I just showed you. So here I've got, down here, I've got sale of livestock, okay, for $48.52. And over here in the red, I've just noted which line item that's going to go on your Schedule F. Sale of livestock, oh, that goes on line 2 up here of your Schedule F. Sale of produce, also on line 2 of your Schedule F. See, it says livestock, produce, grains, and other products. Sale of meat. Now, this is sale of meat. I have raised the animals. This is not me buying meat from someone to resale. So this is going to go again on line 2. Since the animals are raised by me, I have them processed, and then I sell the meat. Here we've got an agricultural program payment. That is simply going to go on line 4. Oh, sorry, that should say line 4A. My apologies. Oh no, here it is, line 4B. See? So that'll be on line 4B here. And then other income. So maybe that's me doing, hey, I did some presentations for farms and I get a little bit of a stipend, that is actually goes into my farm income. So that would actually fall under other income for my farm. So let's say I had $649. That's going to go here on line 8. Okay. Your total gross income, all the money coming in before expenses is your gross income, $11,635, and that's going to go right here on line 9, this box next to line 9. So here you can see I've got it nicely laid out. I know exactly where the livestock, the produce, the meat, I know exactly which line items are. They tell me information and I know exactly where they're going to go out on the Schedule F. So this is something that whether I was doing my own taxes or had a tax accountant do, I can easily find where those items go on the Schedule F. I will say part 1 of Schedule F is probably the easiest. Part 2 gets a little bit more difficult, but not impossible. So here's an example of part 2. This is again the expenses. So over here on the left, this is part 2 of the Schedule F. And then over on the right, this is a snippet from, again, my income statement that tells me all the different types and amounts of my expenses related to the farm for the year. I've got feed, insurance, rent, land, repairs, seeds, supplies, vet, and other livestock purchase. You're going to notice I purposely set up my chart of accounts under my income and expenses to match my Schedule F. Now, what if over here under expense I had, maybe I would just put the vendor that I purchased it from, or if I had some like really random name, it may not be quite as easy to match it up. This is going to keep it easy for you and keep it easy for your tax accountant, so there is no guessing. And the more they have to guess, the more expensive their bill is going to be. So in this example, feed, you're going to find it right over here on line 16 under feed. Insurance, you're going to find a little bit further down on line 20, insurance. Rent, this one can get a little tricky sometimes. You're going to notice line 24 here is rent or lease. However, we've got 2 different sublines. We've got vehicles, machinery, and equipment. We also have other, which includes land and animals. So for me, here I've got land or rent for land. Now, my husband's books, for example, on he has rent for land and machinery and buildings. And so we've actually got 3 different line items under rent. And so in that case, anything dealing with vehicles, machinery, and equipment will go on line 24A. Everything else, land, animals, and then we also put our building there because it doesn't specifically say building up above, goes on line 24B. Repairs and maintenance, right there, repairs and maintenance. Now there's nothing saying that you can't add sub-accounts. So under feed, for example, maybe I want to break it out for my record purposes for lamb, pig, and chicken. And I can do that. But when you're taking your information to your tax accountant, I highly recommend rolling them up and keeping one solid line item so it's really easy for them to read. They've got a total dollar amount right there. Again, quick and easy. We've got supplies, goes under supplies, veterinary medicine, goes under veterinary medicine. And then you're going to notice there's a few blank lines down here, and these are for other. Very commonly, I like to break out my office supplies away from my garden supplies, for example. So maybe my supplies line up here deals with the farm supplies, but then under other expenses, maybe I'll have office supplies. Or like I did here, I have a livestock purchase. I purchased some animals. And so I'm going to go ahead and put that under here and put livestock, livestock animals, livestock purchase, however you want to put it. When it comes to other expenses, keep them minimal. If you can fit them underneath one of the pre-made accounts, do so, but try to keep your others minimal, otherwise it just creates more work. Go ahead, Stephanie.
Yeah, we have a question in the chat, and I also wanted to make sure I let everybody know that you are welcome to ask questions either in the chat box, or can they just ask their question, or should they raise their hand, Jen? What would you prefer?
I can't see everybody's hands, so feel free to interrupt me. Okay. I'm totally okay with that.
Okay. So Mark Dolan wants to know, if you have off-farm income, then you'd file a 1040 in addition to the Schedule F, correct? This is just
so. Yep. So off-farm income is a whole different. It's whole different forms within your tax. Today we're just hitting the Schedule F, which is strictly just farm income and expenses. But your off-farm, as I mean, if you guys were to look at our income taxes, we've got a number of different schedules and a number of different forms. So yes, you know, you're going to deal with the 1040 on that. The Schedule F actually feeds into the 1040, which is kind of a comprehensive sheet. It's like the very first sheet in your taxes, and that's where everything kind of gets funneled into and totaled up on. And like the Schedule F is just an additional schedule detailing out the farm income or loss that you find on the 1040. So I know that can be a little confusing, but yes, you are correct, Mark.
If you had another business, like a consulting business, you would file a Schedule C for that. And
yes.
you might have a bunch of different schedules on your
yes.
form.
Yep. Yeah, you can easily have multiple different schedules. I'm looking at, I've got, well, in our tax return, we've actually got 2 Schedule Fs since we technically have 2 farming businesses. We got a Schedule SE for self-employment tax, which is something that typically when you have a farm, you're also going to have a Schedule SE because you are self-employed typically. Earned income credit. I mean, there's a lot of different schedules that you may or may not qualify for depending on your situation. Any other questions? Before I move on? Does the Schedule F feel pretty good for everybody? Like I said, it can be a little daunting at first, but what I highly recommend is you can easily go out to the IRS website. In fact, if you go back here, oh, where'd you go? There it is. Oh, went too far. Here's the link that actually brings you directly to the Schedule F. And so you can just go ahead and search it on the IRS website. I highly recommend making sure you're on irs.gov because there's a lot of other websites that pretend to be the IRS out there or would like to tell you information when they're not accurate. You can go out there and look at the Schedule F yourself. So when it comes to building out your chart of accounts for your farm, feel free to pull that up and start creating your chart of accounts, dependent upon what software system you use for your accounting. I personally use QuickBooks, so I'm able to go in there and I can actually create all those different accounts in my chart of accounts. If you want to do it on paper, maybe you use Excel, maybe you use Quicken, whatever you use, you can easily build out your chart of accounts. I have also changed my chart of accounts from one year to the next. My very first year, I'm a little too type A personality sometimes. And I was like super detailed. And like after going through that first partial year, I didn't have as much coming in and out, which was good because I looked at it going, oh, I really need to get this onto my schedule, you know, in sync with my Schedule F so that it's way easier for me and way easier for the tax accountant. All right, so let me, sorry, my computer's a little slow here. All right. So we're going to kind of switch gears a little bit from the income statement, and we're going to kind of just hit the balance sheet real quick. So the balance sheet is a snapshot of a financial position at a single point in time. Okay. It's a way to calculate a farmer's owner equity or net worth. So again, we're not necessarily talking about the money coming in, the money going out. We're talking about what you have, your assets, you know, what you owe, your liabilities. You know, as an owner, what have you put in? What have you taken out? A lot of times financial institutions are going to use that. So it's also really important to make sure that you have an updated, accurate balance sheet to ensure that you have something when you're taking out loans. Because I know Steph and I were talking one day, I hate to burst everyone's bubble, but their grants are a wonderful thing, but at some point in time, you're gonna have to take out loans. There's not enough grants out there to cover everything we wanna do in a business. So loans can very possibly be a real thing for a lot of people. This blue box here just kind of demonstrates a real quick, your assets equals your liabilities plus your owner's equity. So again, if you're a little unfamiliar with balance sheets, there's a lot of great resources out there to become a little bit more familiar with them and kind of what falls into each one. Not the balance sheets can be, personally, I think they're almost a little daunting sometimes versus your income statement, because your income statement is easy. Oh yeah, we had money coming in, we have money going out. Your balance sheet, you got to make sure you determine what you have, where it falls within your balance sheet. So I'm going to show you a real quick balance sheet template that I actually found. Stephanie, I found this one today and I am like in love with it. This is a really snazzy one that I happened to come across, and it actually came from Michigan State University Extension Office. And this is a template that actually populates information for you. As you can see, if I try to click on some of these, it's going to yell at me. It's like, no, it's a protected sheet. Because all this information on the front is actually populated using these tabs behind it.
You put this in the drive, right?
Yes, this one's in the drive. Yes,
awesome.
I threw this one in there. I happened to come across it and I'm like in love with it. Like if I didn't use QuickBooks, I'd be all over this one because it's really, really nice and very user friendly. You know, your cash on hand, you know, maybe you have a checking account. Maybe you have a savings account. Because I can't spell, there you go, you know, and you know, $500, $200, we're not a very well-established farm yet. Any prepaid expenses, you're going to include those in here, and as you're typing them in, it actually starts populating them over here on this front summary page. So you can go through each of these, and again, these are going to be your assets. You know, you're going to hit your current assets, which are the things that you have that are easily liquidatable. You know, things that you can easily get to. You know, money in a checking account, you can easily get to that. Your intermediate assets, these are things that can be sold fairly easily to obtain cash. And then your long-term assets, which gets to be a little bit more difficult. So, you know, intermediate assets, you're looking at machinery and equipment. Maybe you have a nice tiller, you know, or a snowblower or something. That's something a little bit smaller, something a little bit easier to offload versus, you know, buildings and improvements, real estate. It's a little harder to sell a chunk of land. It's not quite as quick of a turnaround. So those are going to be your long-term assets. Then we have a tab for liabilities. Again, liabilities, what you owe somebody else. You can go ahead and type those in here. We've got our accounts payable, any current loans that you have, which are typically, your current loans are due fairly quickly, typically within the first year. Intermediate loans, again, it kind of falls in that medium range, maybe within the first year or two. And then your long-term loans, those are typically like if you buy land or a really large piece of machinery, typically you're not going to pay those off within the first year or two. Those are, you know, a lot of times over 25, 30 years. And then this one actually has tabs for personal in it also. So if you Stephanie, in the Farm Beginnings class, Cree had talked about the whole farm plan, you know, your whole farm budget, your whole farm plan. That's also including some of your personal assets, your personal liabilities, you know, getting that personal aspect in there. Because typically as farmers, our farming life and our personal life are so intermingled some days. So we've got some different tabs here for the personal parts also. So as you complete this, it actually fills it out here on the front, and boom, you have a balance sheet. So this would be a great resource for somebody who maybe hasn't quite decided to take the big leap of faith and get yourself an accounting program. Or maybe you just don't like accounting programs and you understand Excel better. So this is I really like this template. I was so, like, I was doing a happy dance when I came across this today. All right, there we go. So that's an example of a balance sheet template. Does anyone have any questions so far before I get on to, okay, who's math nerds? Like, do we got some math nerds in the group today? Because I love nerding out on formulas sometimes. Like, I love nerding out on this kind of stuff. It's so much fun to do and to see and just to play with. So maybe it's me, it's probably the accountant side of me. So who is familiar with solvency? Anyone familiar with what solvency is? I know Stephanie's like, what? Say what? Yes, I am going to throw a really tough one out there. And this one's maybe a little more advanced for some people, but it's actually really neat and actually really fun when you understand it. So solvency measures a relationship among your assets, your liabilities, and your equity. So everything that's on your balance sheet, there's actually 3 different ratios that you can do using your assets, liabilities, and equity to determine a few different things about your business. Basically, what you're looking at is you can take your balance sheet, these ratios, and determine, could your farm be paid off if it was foreclosed on? Now again, nobody likes the idea of our farm being foreclosed, but it's even though we don't want to say, oh, I'll never foreclose my farm. It's not necessarily about preparing for foreclosure, it's making sure you don't get to that point. So these are some really nifty little ratios that I'm going to step through real quick that actually allow you to see what kind of health your farm is at. All right, so these are the 3 different solvency ratios. I'm going to go through each one of them and give you guys an example of where you find it on your balance sheet and how you compute it and what the result comes out with. So the first one we're going to hit is debt to asset ratio. So this is going to be your total liabilities divided by your total assets. Okay, so this tells you the percent of your business assets that are owed to lenders. So if you don't have any loans, fabulous. 100% you own, or sorry, 0, you own all of your assets. The bank doesn't own anything. That's fabulous. So this is one of those instances that the closer to 0 is the better, okay? I know sometimes you always think bigger is greater or more is better. In this case, the closer to 0 is where you want to be. So here's an example, okay? Here we've got our liabilities over here, circled in red, of $20,920, okay? We're going to divide that by our assets. Our assets, 107,353. So if you take that, the 20,000 divided by the 107, you get 0.19. So this tells us that the bank owns 19% of your assets, okay? So now let's say if these numbers were identical, then you're probably going to be sitting at 100%. The bank is going to own 100% of your assets. What would happen if your liabilities number was bigger than your assets number? So if your ratio, if your ratio number here is greater than 1, it means your business is insolvent, which means you're ass over tea kettle with your business. I mean, you owe way more than you've got assets in your business. And that is a huge, huge problem. Most likely something you're going to want to either get out of or figure out some possible way to turn it around. So this is a nifty little ratio just to kind of see, mainly again, if you've got any sort of loans with the bank. The next one we're going to touch on is equity to asset ratio. So this is your equity, what you've got as an owner into your farm, and it's going to be divided by your total assets. This is actually going to tell you what assets you own as a farmer. So the first one we talked about how much of the farm the bank owns. This is how much of the farm do you own. So in this case, we're going to take the 86,433, which is your equity, and we're going to divide that by your assets. And in this particular case, we have a 0.81, which means you own 81% of your farm. So this is a case, the closer to 100%, the better. If you're getting down there in those 30s and 20s and teens, it's maybe something that you want to look at, maybe reconsider. Maybe you know exactly where you're at and it's a short term, who knows? But that's something that you're able to look at to determine the health of your farm. All right, last one. This is debt to equity ratio. Okay, so this tells you the percent of financing relative to that provided by the owner equity. So I know this is probably, personally, I think the kind of a more confusing one out of the 3. So let's go through an example. Again, this is the liability, the bank, or if you have any liabilities with any other creditors too. It's not necessarily a bank, Maybe you owe money to the feed mill. Maybe you owe money to the livestock guy that you buy stuff from. You know, maybe you owe money to other people. So in this case, we're going to take the liabilities, the money that you owe people, and divide it by the equity. And here's where we've got 0.24. So this tells us that the bank provides 24 cents of every dollar of equity that you have. Okay. So like I said, this one's a little more muddled, a little bit more confusing. It's like, well, what does that exactly tell me? So this is telling you if this ratio was more than 1, it means the bank provides more financing than you do. You're relying on your bank more than your farm and yourself. So that's what it's going to tell you is if you're relying on that bank or on your creditors a lot more than what you're relying on the farm or what you're bringing into the farm. Any questions on the ratios? Is anybody like super nerding this out already, going, oh my gosh, I can't wait to play with this? Or maybe that's just me. Maybe it's just me. And it's kind of fun, you know, especially if I take like my my balance sheet and I'm like, you know what if I did this? What if I did that? You know, I'm going to start making all these what ifs, which we're going to kind of get into it just a little bit with partial budgets. But what if you made all these changes? You can go ahead and put those in and kind of see where that puts your ratios. And it's something to consider too, especially if you're going to make really major changes on your farm. So I put this in there because I tell people you have to do yearly comparisons. You just have to do it. You're going to look at these ratios, and not just on a yearly basis. I mean, I highly recommend on a monthly basis, a quarterly basis, but at a minimum, look at these on a yearly basis, year over year. Where are you trending? Where are you going? You know, are your ratios, are they going up in a good way? Are they going up in a bad way? Are they going down in a good way? Are they going down in a bad way? Are you staying the same? Which could be good in some ways. But when you're trying to get better debt ratios, you know, if you're trying to decrease your debt, but, you know, you keep staying the same, well, then you're not making progress. You know, you have to ask yourself, what can I do differently to make this better? Okay. So as it says down here, it's a clear picture of strides your business is making, its current state of finances. Where are you sitting? Where do you want to be? Maybe you have a ratio goal of 50% and you're sitting at 75 and you want to bring, you know, you need to bring it down, or sitting at 25, you need to get up. Then you can start asking yourself, what can I do to get those ratios where I want them to be? All right. I feel like I've been talking forever, but as Stephanie knows, I can talk forever. What kind of questions do you guys have so far? I mean, we've touched on the Schedule F, we've touched on the income statement, we've kind of touched on the balance sheets, bringing things into your tax accountant. I know for some of you, some of this is like yawn. Yeah, I know balance sheets, I know income statements. But what kind of questions do you guys have on these?
I'm going to pick on you, Janelle, just because I know that you've been farming longer than some of the others in the room. Some of us in the class are current farm beginning students. Are these things that you currently do as an experienced farmer, Janelle?
I've not really done any of the comparison from year to year. I should, but I don't. But otherwise, everything else is pretty much the same.
Mm-hmm.
Awesome. Yeah, the year over year, I mean, I struggle with it a little bit sometimes, and there are times that it's like I should almost be doing it on a monthly basis or even a quarterly basis. If it can at least look year over year and at least make sure I'm trending in the right way, it's always helpful.
I will definitely be doing it from now on.
Start throwing some of those ratios around too.
Is there anything besides QuickBooks or FarmWorks that works for accounting?
Good question. So Quicken is one that I know people have used. I've personally never used it, but I've been told that that's a good one that can be a good one to use depending on where you're at with your farming. Otherwise, actually, I'm interested to see, you know, those that have been farming what you guys use. I will say that I am a tried and true diehard QuickBooks fan, mainly because when I was going to school for accounting multiple moons ago, we got trained on it. I know there was Peachtree. I don't even know if Peachtree is still around anymore. Wasn't a big fan of it. But QuickBooks seems to work really well for me. But does anybody else have a different program that they use or a different method that they use?
I'm a fan of good old Excel spreadsheets. But at farms, my bookkeeper uses QuickBooks, and she and I use QuickBooks together.
Yeah, right now we've just been using a very robust notebook.
And that's perfectly okay. Mm-hmm. There's no right or wrong way. There's ways that you can improve and make it easier, but there is no right or wrong way. You do what works for you, as long as it gets the job done, right?
If anyone in the room is good at learning new software and has some database experience, there's a program called Airtable, which is free. And pretty powerful. It just takes a little bit of doing to figure out all the ins and outs of it. I've also heard of a program called Wave Apps, which is also free. I don't know if it's robust enough to handle a fully blown farm business, but people do use it for small businesses. I was telling them about Wave Apps while you were addressing whatever you had to address.
Sorry, my poor cat was locked in my room.
Oh.
Sitting there, I was like, oh, she wants to get out. The joys of working from home, right?
Yes.
Oh, well, good. That's some good ones. And if there's any, feel free, if you guys think of any other software or any other methods, feel free to drop them in the chat box, and you can feel free to share them with everybody else. That'd be awesome.